Our next speaker, Mr. Talal Tabbaa, Chairman and co-founder of CoinMina, speaking on today's topic, crypto and the future of finance. Over to you, Talal.
All right. Assalamu alaikum. My name is Talal Tabbaa, and I'm very happy to be speaking to you all today. So my presentation today is why invest in crypto now, or why look into crypto now. The nice thing about crypto is you can invest with as little as $100. So this does not need to be a capital intensive investment similar to real estate or primary subscription of bonds where you'd have to invest $200,000. Crypto is quite a inclusive investment opportunity. Before that, I'll briefly talk about my experience and why I'm giving the presentation today. So I'm the chairman and co-founder of CoinMina. It is a regulated cryptocurrency exchange based in the Kingdom of Bahrain, regulated by the central bank there. I'm also the COO of Jibril, which is a blockchain development company that builds decentralized applications on the Ethereum blockchain. I'm also on the board of directors of MEPS, which is one of the largest payment companies in Jordan and Palestine and Iraq and the Middle East. I used to work and by education, I am an industrial engineer. So I guess we'll start off with the basics because this is an area that is often overlooked. So digital currencies use blockchain, but not all blockchains have digital currencies. So basically, crypto uses blockchain technology in order to transmit value. And basically, crypto can represent any currency or any asset. It doesn't have to be specifically Bitcoin, Ethereum, or the ones that are popular. We're actually seeing a lot of US dollar backed digital assets. So that's one of the things that I think is extremely exciting, because you have all the advantages of cryptocurrency with your ability to send and receive easily, but you don't have the price volatility of digital assets. So it's actually backed up by a dollar, and therefore it's not as volatile. Blockchains are basically a new way of recording data. Instead of having your data recorded on a single server, it is recorded on multiple servers, or as they are called, nodes. And by doing so, you ensure that there's many advantages of having data stored on multiple servers. The most important is that you don't have to do any type of reconciliation, because reconciliation is done after every successful transaction. So throughout history, there's been multiple attempts to create digital currencies, and all of them have failed for one reason. And that reason is the double spend problem. So the double spend problem is when I have physical cash and I transfer $100 physically to Melwin, this $100 cannot be spent again. The transfer is final. That means I can't copy and paste, or can't forge that $100 note to pay with it more than once. In the 90s, there were many attempts to create digital cash, but all of them failed because people would find ways to copy and paste that cash and send it. So one of the things that is very interesting from a digital standpoint is when I send a WhatsApp message, or when I send a WhatsApp video or email, what's actually happening is I'm taking a copy of that digital file, I'm sending you the copy, and therefore we have two versions of the same file. This is fine if you're doing a video or a PDF file or anything that's exchange of information, but it's a big issue if you are transferring value, or if you're transferring money. Because obviously, if you are able to copy and paste money endlessly, the money would be diluted, and because everyone would just copy and paste it as many times as they want. With blockchain, this issue is resolved, because actually the blockchain itself acts as the intermediary that makes sure that no one can spend their money twice. A simple example would be, if I send a wire from my bank account, the bank would debit my account and would credit the receiver's account. And then, assuming I no longer have funds, I am unable to spend it again. With blockchain, this process is automated, and therefore it solves the double spend problem. So why is it called a blockchain? Actually, the naming is very descriptive because transactions are packaged into blocks that are sequentially stored. So imagine the transaction that I mentioned earlier is in block number one. Once this block is filled up, meaning it reached its capacity, each block can fit a certain number of transactions. After those transactions are, after the block is filled up, it's then placed on the blockchain, and that's why it's called the blockchain, because literally it's a chain of block. Every block includes transactions. And this is a breakdown, a sample of how a transaction looks like. Each transaction has a unique identifier. This is the block that the transaction is included in, and then it includes the sender's address, the receiver's address, and the value that is being sent. So I thought it would be helpful to kind of show you how that looks like, because it's often an area that is misunderstood. So there's multiple implementations of crypto assets. Bitcoin basically maintains a decentralized ledger, and it's mainly used as a currency and a store of value, whereas Ethereum has very different use cases. And I understand before this gets technical, I'll make sure that, or I'll try not to get technical and keep this as general as possible. But basically, Ethereum allows you to conduct financial transactions that use smart contracts. And basically, smart contracts are something that was never possible before crypto. And I guess to explain that, I'll use an example from the real world. Today, if I rent an apartment from any of the attendees on this call, what would actually happen is we sign a physical contract or a PDF file, even a DocuSign. And then we have a contract that says, I am the renter, and then the landlord names their price. And I have to wire them money every quarter or every month or every year, depending on our lease agreement. This is a standard or an analog contract. In a smart contract, what basically happens is you combine the payment and the execution of the payment as part of the agreement between both parties. So if I sign a smart contract for a lease, every month or every 3 months or every year, depending on the terms, the money would leave my account and would go to the landlord's account without anyone doing anything. It's done in an automated manner. And that's why Ethereum is quite special, because it allows us to do things that were previously unimaginable. And that's why companies like Visa and many others are now building on the Ethereum blockchain. So there's different types of tokens. There's governance tokens similar to Ethereum. There's security tokens, which are basically simply a digital representation of tokens that of assets that we previously had. So equities, bonds, real estate. And then you have your payment tokens. The most popular one that caused, I guess, got a lot of PR release was the Libra token that Facebook tried to create. But also there's one called USDC, which is very, very interesting because it's issued by a company called Circle, and Circle is owned by Goldman Sachs and Coinbase. And Coinbase is a publicly listed company in the US. And I guess what the point that I'm trying to make here is that crypto escaped its, initially, like 5 years ago, people were saying, oh, I don't know what I think about crypto. It might or might not succeed, or might not be part of the financial sector. Today, that question is no longer ambiguous. It is clear and it is evident that crypto is going to be part of the financial sector. And in my humble opinion, that percentage is only going to grow from here onwards. So why are smart contracts innovations important? Because it allowed us to create financial products that are previously unimaginable. So I think the process on the left is something that everyone on this call is familiar with. When you want to exchange stocks or bonds or commodities, you have the buyer and their broker. And then you have the exchange, which could be the NASDAQ, could be the CME, could be the New York Stock Exchange. And then you have your broker and the seller. You have the compliance and governance, which obviously comes from the regulator. And then you have matching and clearing engines, and you have market makers that help the exchange make sure it's liquid. In the decentralized finance space, you have a buyer and a seller, and a smart contract in between that manages all of the interactions. All parties can also participate. You still have liquidity providers, you still have matching engines, you still have pricing, except those are all done in an automated way. So decentralized exchanges are going to be a very important part of the future of finance. And it's already very popular in crypto. It just hasn't made its way to traditional finance just yet. Obviously, crypto is in its infancy stages. Today, the number of people that, I think there's a graph that I had included, less than 2% of the global population is using crypto, which is a very, very low number if you compare it to the internet. The internet had 2% of the global population in 1998. And what that means is that crypto is at a stage today which is similar to the internet in 1998. So if you were going to bet whether that number is going to increase or decrease in the coming 10 years, I think the answer would be quite clear. But having said that, crypto does have limitations. The cost on Ethereum is quite high. Stability is still somewhat of an issue, and there's environmental concerns on the mining side. This will hopefully be addressed next year with the launch of Ethereum 2.0, where they fix the energy consumption issue and they fix the high gas issue. So with the exception of Bahrain and the UAE, no Middle East or North African government has positioned itself to benefit from this technology. Inshallah, we'll see. I'm hopeful and I'm confident that we'll see additional regulators around the world, hopefully Sudan as well, start regulating crypto, because companies or countries that have regulated it have been able to reap the benefits. Switzerland is a great example where you have 16 companies that were created in the past 10 years that are worth over $1 billion that came out of Crypto Valley, which is a small city in Switzerland that regulated crypto very early on and was able to reap the benefits. Yeah, I guess I wanted to keep it short and simple, and if there's any specific questions, I'd be more than happy to answer them. But I guess the final point that I'd end with is to invest in crypto, you don't need to invest with a lot of funds, meaning you can invest with $100, $150. And the best way to learn about it is obviously to try it out yourself. Thanks again for the opportunity, and happy to answer any questions.
Right, Talal, thank you for your presentation. And yes, attendees, if there are more questions, please kindly send it over to us and we'll get Mr. Talal reply to you immediately. Now, I have a question.
Please.
So, crypto is still not functional in many countries, like GCC specifically, correct?
Bahrain is a GCC currency and crypto is fully regulated in Bahrain.
Okay, so that could be a good case study for other GCC countries to also have a look, and Middle East countries, basically.
Actually, UAE also launched their crypto regulations. They launched it 2 months ago from ESCA, the Security and Commodity Authority. So it is only a matter of time until every government in the world basically accepts crypto, because as the internet taught us, this is not something that you can pin down. I recall in the early 2000s, Syria and several countries tried to ban the internet, and we all know how that ended up playing out. So yeah, in the Middle East, Saudi hasn't banned crypto, but it hasn't regulated it. Obviously, Saudi is the biggest market, but I think Saudi will wait and see how it goes in Bahrain and UAE before making a decision.
Done, sir. Thank you, Talal, for your time and presentation, and hope to meet you in person soon.
Great. And I'll get you that baklava for sure.
Sure. Thank you very much. Take care, Talal. Have a nice day.